students, in present video I am going to explain about third problem from retirement of a partner topic. I am taking this question from Telangana State Telugu Academy Inter Second Year Accountancy Textbook. But this video is useful to all commerce students who want to know about retirement of a partner topic. Previous videos links are available in the description box. Let us see the question first. S, P and G were partners sharing profits and losses in the ratio of 4:3:3. So this is known as old profit and loss ratio. S share is 4 by, add these three numbers, 4 plus 3 plus 3, 10, 4 by 10. P's share is 3 by 10. G's share is 3 by 10. Their balance sheet as on 31st March 2020 was as under. This is known as old balance sheet, assets and liabilities. Below the balance sheet, G retires from the business on the following terms. G retires. By seeing this sentence, we should understand that this is retirement problem. G is retiring partner, S and P are continuing partners or existing partners. A. Buildings valued at 1,30,000 rupees. B. Depreciate furniture and machinery by 10%. C. Provide for bad debts at 1,600 rupees. D. Creditor 6,000 need not to be paid. E. Goodwill valued at 27,000 rupees. F. G will be paid 17,700 immediately and the balance is transferred to his loan account. Finally, what is asking? Give journal entries, ledger accounts and balance sheet of S and P. So journal entries are not required because in public examination they never ask journal entries. We prepare ledger accounts and new balance sheet. In ledger, first account is revaluation account. So why we prepare revaluation account? When one partner is retiring, existing partners revalue the assets and liabilities. Old balance sheet contains cost price of assets and liabilities. Now market values we should consider, and if there is any adjustment, increase or decrease, that is to be adjusted. And in this revaluation of assets and liabilities, if there is any profit, that profit belongs to all the three partners. If there is any loss, that loss is to be paid by all the three partners. To know the profit or loss in revaluation of assets and liabilities, partners prepare revaluation account. So revaluation account is a nominal account. Therefore, nominal account rule we should follow while preparing this account. Nominal account rule is debit all expenses and losses, credit all incomes and gains. So in revaluation of assets and liabilities, if there is any loss, it is to be shown on the debit side of this account and the profit on credit side. When loss comes, suppose in revaluation of asset, we came to know that asset value is reduced. It is a loss. Otherwise, liability value is increased. It is a loss. So these two we should show on debit side of this account. Similarly, in revaluation of assets, we came to know that asset value is increased. Credit side we should show that. Otherwise, in revaluation of liability, we came to know that liability value is decreased. It is a profit. So credit side we should show that. Let us see the adjustments related to revaluation account. A, B, C and D. These four adjustments are related to revaluation account. See the event. Buildings valued at 1,30,000 rupees. In old balance sheet, building value is given as 1,20,000 rupees. In balance sheet, building value is given as 1,20,000 rupees. No, this is known as cost price. Firm purchased this building at 1,20,000 rupees. And in adjustments, he is giving building value as 1,30,000 rupees. No, this is known as market price. So at the time of retirement, when existing partners observed the market price of this building, they came to know that market price is increased by 10,000 rupees. Old value 1,20,000, new value 1,30,000 rupees. No? So building value is increased by 10,000 rupees. Building is an asset. Asset value is increasing. It is a profit. Profits on credit side we should show now. So write down on credit side. by buildings account. In bracket, show the calculation. Market value is 1,30,000 rupees minus cost price is 1,20,000 rupees. So building value is increased by 10,000 rupees. 10,000 in outer column. B. Depreciate furniture and machinery by 10%. Furniture is to be depreciated by 10%. In old balance sheet asset side, furniture value is given as 4,000 rupees. In old balance sheet, furniture value is given as 4,000 rupees. Cost price is 4,000 rupees. And in adjustments, he is giving that we have to provide depreciation on furniture 10%. Means what? Market value of this furniture is decreased by 10%. So on 4,000, 10% will be 400 rupees now. Means market value is 3,600 rupees only. So old value 4,000, new value 3,600. So how much is decreased? 400 rupees. Furniture is an asset. Asset value is decreasing. It is a loss. Debit side we should show. To furniture account. Show the calculation in inner column. Furniture value 4,000. Depreciation 10%. 400 rupees in outer column. Next, depreciate machinery by 10%. In old balance sheet, machinery value is given as 60,000 rupees. In old balance sheet, machinery value is given as 60,000 rupees. Cost price is 60,000. In adjustments, he is giving that market value is reduced by 10%. Depreciation on machinery is 10%. So 10% on 60,000 is 6,000 rupees now. Means what? Market value is 54,000 rupees. So old value 60,000, new value 54,000. Means machinery is decreased by 6,000 rupees. Machinery is an asset. Asset is decreasing. Means loss. Debit side we should show. To machinery account. Show the calculation here. Machinery value 60,000. Depreciation 10%. 6,000 rupees in outer column. CB. Provide for bad debts at 1,600 rupees. In old balance sheet, debtors value is given as 21,600 rupees. In old balance sheet, debtors value is given as 21,600 rupees. Debtors means the persons who are liable to us. So they have to pay 21,600 rupees to us. And we want to provide provision for bad debt 1,600 rupees. Percentage is not given, directly amount is given. Provision for bad debt means what? Doubtful debts. So money may come, may not come. Chances are 50-50. So this is expected loss. If you deduct this PBD from debtors, then the remaining debtor value is 20,000 rupees now. So old debtor value 21,600 and a new debtor value is 20,000 rupees. Debtor is an asset. Asset value is decreasing, means loss. Debit side we should show. 2. Don't write debtors. You have to write provision for bad debt. Amount is directly given, no need to calculate. 1,600 rupees. Debit, creditor 6,000 need not to be paid. In old balance sheet, liability side, creditors value is given as 36,000 rupees. In old balance sheet, creditors value is given as 36,000 rupees. Creditors means the suppliers to whom firm is liable. We have to pay 36,000 rupees. And in adjustments, he is giving that out of this 36,000 rupees, 6,000 we need not to pay. So old creditor value 36,000, new creditor value 30,000. Creditor value is decreased. Creditor is a liability. Liability value is decreasing. It is profit because 6,000 we need not to pay. So profits on credit side we should show now by creditors account. No need of any calculations. 6,000 directly in outer column. Revaluation account related, all adjustments are completed. Finally, we have to find out the profit or loss in revaluation of assets and liabilities. Observe the amounts. Credit total is more than debit total. In rough notes, first we have to calculate credit total. I am writing here. 16,000 rupees minus debit total 8,000 rupees. Then the difference is 8,000. What is the meaning of this answer? In revaluation of assets and liabilities, there is a profit of 16,000 rupees and there is a loss of 8,000 rupees. So finally, there is a profit of 8,000 rupees. So this profit belongs to all the three partners, SPG. So to their capital accounts, we have to transfer this amount. Which side? Where the total is less, that side we have to show this transfer calculation. Debit side total is less. So debit side to S capital account, profit 8,000 rupees. In which ratio we should distribute? SPG. Old ratio is 4:3:3. Means S share is 4 by, add these three numbers, 10. So 4 by 10. Next, to P capital account, profit 8,000 into P's share is 3 by 10. Next, G capital account, profit 8,000 rupees. G's share is also 3 by 10. 800 into 4, 3,200 rupees. 800 into 3, 2,400 rupees. Same. Finally, two sets put the totals. Credit total is 16,000 rupees. Debit side, we wrote the difference now, 8,000. Now if you add all these amounts, same total comes 16,000 rupees. So revaluation account is completed. Next we have to prepare capital accounts of all the three partners. After revaluation account, we have to prepare capital accounts of three partners. Capital accounts are personal accounts. So while preparing these accounts, personal account rule we should follow. That is, debit the receiver and credit the giver. Means from the firm, if partner is receiving any benefit, debit side we should show. To the firm, if partner is giving any benefit, credit side we should show. Same point in another manner also I will explain. That is, at the time of retirement, if firm has to pay any amount to the partner, all those amounts credit side we should show. Similarly, at the time of retirement, the amounts which partner should pay to the firm appear on debit side. So capital accounts we have to start with opening balances. From where we should take these amounts? In old balance sheet, liability side capitals are given now. S amount 1,20,000 rupees, P's amount 60,000, G's amount 40,000. These three amounts we have to show here. Opening capital balance on credit side we should write. Why? Because capital is a liability. Liability shows a credit balance. Therefore credit side. Otherwise, partners brought capital into the firm. If they retire, firm has to return these capitals to them. So firm has to return capitals to partners at the time of their retirement. Means credit side only we should write now. For opening balance, we have to write by balance brought down. Next, revaluation profit we should write. In revaluation account, debit side we distributed profit to all partners now. So based on this posting, let us frame the journal entry. Revaluation account should be debited. Because in revaluation account, debit side only we wrote these three amounts. Revaluation account debtor. 2. In particulars column we wrote S capital, P capital, G capital. These three amounts we should credit. S capital to P capital to G capital. Amounts S capital 3,200 credit. P capital 2,400 credit. G also same. Total 8,000 rupees. So this is the journal entry for profit in revaluation of assets and liabilities. As revaluation account is debited in the entry, in revaluation account debit side we posted. And in capital accounts are credited. Therefore, in capital accounts, credit side we should post. What to write in particulars column? By revaluation account. And in S capital column 3200, in P capital column 2400, and in G capital column also same 2400. Thus, as per journal entry, revaluation profit and credit side we should write. Otherwise, revaluation profit is partner's amount. So when partner retires, firm has to pay this amount to the partner. At the time of retirement, the share of partner in revaluation of assets and liabilities, firm should pay to partner. Therefore, credit side it appears by revaluation account. In revaluation account, we calculated now 3200, 2400 and 2400. Next come to accumulated profit, general reserve, undistributed profit. In old balance sheet liability side, general reserve 24,000 rupees given. So to all partners we have to transfer this amount. We said we should show general reserve amount belongs to 3 partners. So if they retire, firm should pay these amounts to them. Means credit side. By general reserve account. Amount is 24,000. In old balance sheet, liability side he has given. In which ratio we should distribute? Old ratio. 4:3:3. So first person S share is 4/10. 9,600. Second person share 24,000 rupees into 3/10. 2,400 into 3. 7,200. For third person also same now, because same ratio. Write down these 3 amounts here. 9,600, 7,200 and 7,200. Come to goodwill adjustment. EBIT. Goodwill valued at 27,000 rupees. In old balance sheet asset side, goodwill is not given. Only in adjustments it is available. In case of retirement, to adjust goodwill, there are 3 methods. Revaluation method, memorandum revaluation method, and direct adjustment. How to identify which method we should use here? If it is memorandum revaluation method, goodwill will be valued, goodwill will be created and written off. Written off means cancelled. In the question, if cancel, written off words are given, then we should apply memorandum revaluation method. Goodwill should be written off, goodwill should be cancelled. In present problem, these sentences are not given. So, we need not to apply memorandum revaluation method. How to identify direct adjustment method? In the question, if a sentence is given like this, retiring partner's share of goodwill should be adjusted without opening goodwill account, then we should use this method. That sentence is also not given in this question. Therefore, don't use direct adjustment method. Then what is left? Revaluation method. Under this method, goodwill will be created and transferred to all partners' capital accounts in old ratio. So goodwill entry we should write now. We are not writing journal entries, even though my advice is to write goodwill entries. Because while preparing capital accounts, goodwill account, these entries are useful for us. So goodwill entry we should write now. Goodwill is an asset. So firm wants to create goodwill. Asset shows a debit balance. Therefore, if you want to create goodwill, by debiting we should create it. Goodwill account debtor. Goodwill is valued at 27,000 rupees. No? Goodwill amount is 27,000. This amount to all partners' capital accounts we should transfer. So capital is a liability. Liability shows a credit balance. So if you want to increase the liability, you should credit. If you want to decrease the liability, you should debit. So goodwill we want to add to capital. Capital shows a credit balance and we want to add goodwill to capital. Means again capital we should credit. Therefore, all the three capitals we should credit to S capital account. Goodwill amount 27,000 rupees. In which ratio we should transfer? Old ratio 4:3:3. 4/10 to P capital account. 27,000 rupees into P's share 3/10 to G capital account. 27,000 into 3/10. 2,700 into 4, 10,800. 2,700 into 3, 8,100. Here also same. Now, capital accounts we are preparing. In entry, capital accounts are credited. Therefore, credit side we should post. By goodwill account. Write down the amounts. Goodwill adjustment is also completed. Goodwill. Firm has to pay to partner if they retire. That is why credit side we are writing goodwill. Now finally, we have to find out the balances of these accounts. Who is retiring? G. Therefore, first to find out the total of his column. 57,700. So, firm has to pay 57,700 to G. His capital, his revaluation profit, general reserve amount, goodwill amount. Total 57,700 firm should pay. And once you see F bit, see the F bit, G will be paid 17,700 immediately and the balance is transferred to his loan account. Means in 57,700, firm is paying 17,700 immediately. So 17,700 we should show on debit side. For this, what to write? In old balance sheet asset side, cash balance is given or bank balance is given. Once we should see. In old balance sheet asset side, cash balance is given 54,400. Bank balance is not given. As cash balance is given, for this amount we should write to cash account. Remaining amount 57,700 minus 17,700 is equal 40,000 rupees. So 40,000 firm is not paying immediately. Then what they do? They transfer this amount to G's loan account. So for this 40,000 we should write to G loan account. Put the total. Now for existing partners, first credit totals we should calculate. Debit side, for these amounts we should write to balance carried down. Same amounts. Put the totals. So capital accounts are completed. Next we have to prepare cash account, goodwill account, G loan account. First we prepare cash account. For preparing cash account and G loan account, by taking these two amounts, we will frame one entry. In G capital account, debit side we posted to cash 17,700 and to G loan account 40,000 rupees. If you want to post like that, while writing the journal entry, G capital account should be debited and cash account should be credited. G loan account should be credited. Cash 17,700. G loan account 40,000 rupees. Total 57,700 in debit column. As G capital is debited in the entry, in G capital account debit side we posted. Now let us see how this entry appears in cash account and G loan account. Cash account, particulars amount. We should start cash account with the opening balance. From where we should take this amount? Asset side, cash balance 54,400 is given now. This amount we should show here. This opening cash balance we should show on debit side because cash is an asset. Asset shows a debit balance. Therefore, write down on debit side. to balance brought down 54,400. Then come to this second entry. In entry, cash account is credited. Therefore, in cash account, credit side we should post. What to write in particulars column? We debited G capital, write down that account name. By G capital account. Amount, don't write G capital amount. We are preparing cash account, no. Write down cash, 17,700. Then finally, balance carried out. Debit total is more than credit total. So credit side balance carried down comes by balance carried down. 54,400 minus 17,700 is equal 36,700. Put the total. So cash balance is 36,700. This amount appears in new balance sheet as cash balance. Next, G loan account. See this entry. G loan account is credited in this entry. Therefore, this entry on credit side of G loan account we should post. What to write in particulars column? We debited G capital account. Write on that. By G capital account. Don't write this amount 57,700. We are posting this entry in G loan account now. G loan account amount 40,000 we should write. Total 40,000. Debit side balance carried down comes to balance carried down 40,000 rupees. Total same. In new balance sheet liability side, G loan 40,000 appears. Next, goodwill account. In old balance sheet asset side, goodwill is not there. Therefore, there is no opening balance in goodwill account. Directly this goodwill entry we should post. In entry, goodwill account is debited. Therefore, this entry debit side we should post. What to write in particulars column? We credited these three capitals, no? Write down these capitals. To S capital account, amount 10,800. To P capital account, 8,100. To G capital account, same 8,100. Total 27,000 rupees. Credit side there is no amount. Therefore, balance carried down 27,000 rupees. Total same. In goodwill account, there is balance carried down. Means goodwill account is not closed. So it is showing a debit balance. Debit total is more than credit total, no? So goodwill account is showing a debit balance. This is an asset. So in new balance sheet asset side, we have to show goodwill 27,000 rupees. So remember, in revaluation method of goodwill adjustment, goodwill amount appears in new balance sheet under asset side. Balance sheet of SP as on 31st March 2020. Old balance sheet contains three names, no? SPG. Now G is retired. So new balance sheet contains only two names, SP. Liabilities amount, assets amount. Based on the old balance sheet, we have to prepare new balance sheet. Asset side, buildings, 1,20,000 rupees. In adjustments, EBIT, buildings valued at 1,30,000 rupees. In new balance sheet, market values only we should write. Building market value is 1,30,000 rupees, no? That amount we should write under asset side. Buildings. In inner column, 1,20,000 rupees cost price plus appreciation 10,000 is increased, no? In outer column, market value of building 1,30,000 rupees. Next, furniture 4,000 rupees. In adjustments, depreciate furniture by 10%. Furniture cost price is 4,000 rupees and 10% depreciation we should provide 400. Furniture in inner column, cost price, depreciation minus. In revaluation account we calculated 400, market value 3,600 in outer column. Next, machinery 60,000 rupees. Adjustment, depreciate machinery by 10%. Machinery cost price is 60,000, depreciation 10%. Asset side, machinery Cost price in inner column 60,000. Subtract depreciation. We calculated in revaluation account 6,000 rupees came. Then remaining amount 50,000 rupees is market price. That amount we should show in outer column. Next, stock 20,000 rupees. And here there is no adjustment related to stock. Stock 20,000. There is no adjustment for stock now. Stock 20,000 rupees. Next, debtors 21,600 rupees. Adjustment number C. Provide for bad debts at 1,600 rupees. Debtors 21,600. Provision for bad debt 1,600. So provision for bad debt we have to subtract from debtors. Debtors in inner column 21,600 minus provision for bad debts 1,600. Remaining amount in outer column. Cash. Which amount we should write here? We prepared cash account now. In cash account our balance carried over amount. Answer 36,700. This amount we should show here. Cash 36,700. All assets were written. Finally, in goodwill account there is a balance, debit balance. So that debit balance we have to show under asset side. Goodwill 27,000 rupees. Asset side completed. Come to liability side. Capitals. In old balance sheet, capitals of S, P and G are given. But in new balance sheet, we should write the capitals of only S and P. Because G is retired. Which amounts we should write here? In capital accounts we got answers, no? Balance carried down 1,43,600, 77,700. These two amounts we should write here. S capital 1,43,600 rupees. P capital 77,700 rupees. Come to G. To G loan account we transferred 40,000 rupees. We have to pay 40,000 rupees to G. This is liability. That amount we should show here. G loan 40,000 rupees. General reserve 24,000 rupees. We transferred this amount to all partners capital accounts now. Now there is no general reserve account. Therefore, in balance sheet liability side, we should not show general reserve. Next, creditors 36,000 rupees. See the adjustments. Debit. Creditors 6,000 need not to be paid. Creditors 36,000 rupees. We have to pay 36,000 rupees to creditors. And in adjustments, he is giving that out of this 36,000, 6,000 we need not to pay. So we have to subtract this 6,000 from 36,000. What is the meaning of this 6,000? It is discount. So creditors have given some discount to us. Creditors in inner column 36,000 rupees minus discount 6,000. In outer column 30,000 rupees. So all amounts were written. Finally, find out the totals of two sides. Asset side total is 2,91,300. Liability side. Thus, two sides you should get the same total. Then only problem is correct. So this is all about third problem from retirement of partner topic. Hope this video is helpful to you. Thank you.